All right. Hello, hello. I want to welcome Vincent Au today. Vincent is a CIO for Gondor Capital Management, and he was nominated for multiple awards and top ranked by HFM, BarclayHedge, Preqin, and EurekaHedge. And I would love to interview him today about all sorts of things, and especially focusing on the market, about investments, alternative investment, and so on and so far. So let's get to it. Hello, Vincent. Thank you so much for finding the time to chat with me.
Hey, Leah, always a pleasure. I'm thrilled to be here today with you. Thanks for having me.
Of course. Thank you so much. So yeah, I'm fascinated by your work, and always, as we met on Twitter, it was always interesting to read your posts and your ideas. So let's get to it. Tell me, what's your overall investment philosophy?
So, first of all, again, thanks for having us today. Thrilled to be here with you. So, Gondor Capital Management, we are a fundamentalist shop.
Mm-hmm.
We are intensely researching companies, finding ideas, and we take our positions with an options overlay.
Mm-hmm.
And I think that's the really most unique part about us, is that many of our friends in the hedge fund industry, they'll take a long position and that's it. They ride or die with that position, or they'll short a position and they'll also ride and die with that position. For lack of a better phrase, we are the true definition of a hedge fund. We hedge our positions. We use options as a way to accumulate positions at a disciplined price. We also use it to lower our cost basis.
Mm-hmm.
So I think options are really important for me to say that, because there is such a misunderstanding of options in today's world. I think, especially the last couple of years with the meme stocks, with also the Tesla daily options, option volume has skyrocketed. It's the highest it's ever been. But I think that because of that, a lot of people, even professional investors, they look at options as a casino mechanism.
Mm-hmm.
As you're going to Las Vegas, you're rolling the dice.
Yeah.
In fact, I was talking to a friend of mine who's Steve Sears, who's the journalist for Barron's magazine. He writes an options column for Barron's. And we were joking that people think options is more speculative than Bitcoin trading. That's how crazy it is. When in fact, options are probably as, depending on how to use it, is as speculative, also as conservative as any instrument out there,
Yeah.
right? You could use options. Yes, you want to speculate with leverage. Of course, you can use options. And on the other side of the coin, you use it for many different ways: credit spreads, put spreads, a bull spread. A lot of different ways to really solidify and insulate your overall portfolio. And that's really important to say that, because some people say, like, for example, equities. Well, you can lose all your money in equities too. They go to zero. But on the other side of the coin is people say, oh my gosh, never buy penny stocks. Or, on the board is so speculative. Well, Adidas is on the bulletin board, right? The world's second largest company on sports apparel is on the bulletin board. So a lot of companies trade on the pink sheets that are really valuable franchises, but they're there because that's what they want to be.
Yeah.
So I think options really needs a champion like you, okay? Because I've seen your tweets also, to really explain to the masses that, hey, options is not options could be a casino if you make it a casino.
Yes.
But it also is not.
Exactly. I totally agree with you. I just posted it on Twitter, I think a couple of days ago. I said, just because you can't trade options doesn't mean you can't make money trading options. And options to me are very sophisticated, and there are ways to make money if you have calculated risk and you know what you're doing. But as you said, sadly, most people are using it as a get rich quick tool, which mostly ends up exactly the other way. So yeah, I totally agree with you. And So you guys trade short and long as well?
That's correct.
Yeah, short and long portfolios. Okay, yeah, I tried to do that this year. I wasn't that good. I'm better
Well, it's
with
okay.
directional quick swing trades. That's kind of my thing. That does really good for me. But
Well, I think that's really important you say, and I think it's really important you say that, because I think it's fantastic that you recognize what you're good at, right?
yes.
Because the gig, if you want to call it that, is
Mhm.
about making money.
Yeah.
It's not about experimenting. It's not an ego thing. Like
Yeah.
for us, for example, our focus is only on the U.S. markets. That's
Mhm.
it. Am I intelligent enough to say yes? I could trade. Let's just say, companies that trade on the Hang Seng Index in Hong Kong, or the Shanghai Index, or the London FTSE. Sure, I can. But the reality is that my time and resources, my asset, my knowledge is best focused on U.S. markets.
Mhm.
So it's not an ego thing. It's not about you being able to trade everything. It's about making money. And whatever you're really good at, sure, stick to that.
I teach everyone because I do a lot of trading psychology classes and I help traders to understand technical analysis, and I always tell them focus and pick very small ways to trade. Don't try to trade forex and futures and options and everything. Just pick what suits your personality, I would say, and what you're good at, and just simplify it. And I think that really works well, right?
That's true. And even us professional investors like myself, institutional investors like myself, we have biases.
Mhm.
There's certain sectors, I won't share them with you today. Okay, I'm sorry.
Okay, no worries.
But there's certainly certain sectors I would tell you that I absolutely love. I know it so well.
Mhm.
But there are also other sectors where I would tell you candidly, not my best, sector that I'm really an expert on.
Mhm.
And again, that is true. We all have biases. But
Yeah.
again, to reiterate what you said just now, you have to be honest with yourself and say, this is what I'm good at, and stick to it. And don't it's not an embarrassment to say you can't be good at everything. That's just how life is.
Well said. I love that. Exactly. Good one. So my other question is, so how do you select the stocks? Like how do you approach when you're selecting something you're gonna trade? What is your process there?
So for me, we start from the top from two different areas. Our
Mhm.
starting point. The first area is what's a general theme that I believe very strongly in.
Mhm.
And then when I figure out that theme, I find the best companies that fit within that theme. Okay.
Okay.
For example, a couple of years ago, we were really all in on years ago. We were all in on financials. The
Mhm.
reason why was I really thought that interest rates had to go higher. And historically speaking, when rates go higher, you go into all the financials, asset managers, the insurance companies, the banks, the regional banks,
Yeah.
all the companies that benefit from the interest spread. So that's what we went into. And fortunately, they did raise rates and we made money that way. The second starting point for us is really looking at companies that I find, for simplicity speaking, I think are undervalued today based on tomorrow.
Mhm.
Okay, and my definition of undervalue is a mix of fundamentals, which is balance sheet, income statement, cash flow, leverage, debt to equity ratios, all the fundamentals 101, if you will. But
Mhm.
then for me, what's really important to me is look at a company and understand their business and say, how do you actually make money? Okay, and what is your competitive edge? And is your competitive edge at risk here,
Mhm.
right? And I think that's so important to understand because just in the last 10 years, for example, 15 years, in the last 15 years, give you a great example. Apple went from being the fourth cell phone company, being dominated by Ericsson, by Nokia, Palm Pilots, Blackberries. Now they're the last man standing. Does anybody have a BlackBerry? Raise your hand. Okay. Does anybody have, Nokia phones, Ericsson phones, right? Raise your hand. No one's raising their hands right now. Okay.
No
So,
one, no one.
okay, exactly. So I think so for me, most people, they look at a company, they look, oh, like like right now it's earnings season. A lot of people say, hey, the sell side analysts will look for 50 cents. They're in 55 cents. Great. Buy the stock, right? It's momentum. People go into the stock. But you have to understand, how did they actually make the 55 cents? Okay, did they pull a lever to meet it, or are they operationally doing very well? On the other side of the coin, I won't tell you, the company that we have a sizable stake in announced earnings this week, and on the opening, it was down 10% on the opening, and I scratched my head. I couldn't stand it because the company, yes, if you compare the company's results from the year early results, they were poor. But people didn't realize that, wait a second, they spend more money into the business. So it was an investment into the business for future growth. It wasn't just they were spending money for sake of spending money. They weren't buying you lunch, if you will, okay?
Yeah.
But people, when you just see the numbers, without doing more homework on them, they missed that. And the stock ended up not only not being down 10%, being up 5% for the whole day. It was up.
Wow.
So a 15% swing. But again, if you know your company so well, which is for me, all of our core holdings, I know really well. And I'm going to tell you that I learned that from someone that I really respect, Mario Gabelli.
Okay.
Mario is, I'm blessed to have a personal relationship with him. But I can tell you two really great stories about Mario that I personally was witness to. Mario, we're talking about CBS, Viacom. He literally is spitting out numbers. How many shares outstanding? What's the cash flow? What's the earnings? He's like reciting it like the alphabet. Okay.
Wow.
But that's his core holding. Second time was that one time we talked about a company that I knew very well. Not if it was a small company, and I thought I got him. Trying to get. I said, "Do you know this company?" Gave him the symbol. Oh yeah, company so and so. I literally want to bang my head on the wall, okay? Because that just taught me that his knowledge is so universal, is so impressive. It taught me, that in order to feel comfortable with your companies, you gotta know them well. You got to know them well in good times and bad times, because when it is bad times, when stock's being sold off, you know your company well, you're able to say, I'm buying the stock. I know what's going on. I know this is a ridiculous sale price, and people are wrong about that. Because otherwise, you're on the other side. You see stock being sold off, and you're scared. It's very human nature. You're scared.
Yeah.
You're going to want to sell too. You're thinking about preserving capital. You're thinking about, did I miss something? Let me shoot this stock. I'll ask questions later, right? So, but if you know your company really well, you're able to manage your emotions. You're able to manage your response to what's going on, and that really is such an understated piece of investing. So a lot of time, your biggest enemy really is yourself.
Yes. 100% true. Well, you see it because if you just buy something that someone else recommends and you don't really know why, and then, as you said, like these companies sometimes sell off even 50%. Like we saw it in last year. That was absolutely crazy with some companies. Like even, for example, Meta, like people say, oh, it's going to zero. Then if you don't know the company, the negative emotion just starts spiraling. And then you see all the bad news because the media are adding this fuel to the fire to make people totally freaked out. And then you just sell because you don't have the information. And I think that's 100% true. Like just buy what you understand. I wouldn't say like buy what you know, because sometimes people just buy companies because it's in their city or they use the product. It doesn't mean that the company is profitable. I always say, don't just buy it because you like to use it. Like look at the financials. Come on. It's not going to save your investment because you're using it. But yeah, I
Yeah.
agree with you. It's super, super important. If people don't know how to read earning reports and understand companies, maybe they have an advisor they trust, but if they don't have someone, they should just buy index funds. That's my opinion, because otherwise you just lose money. And I think that's the reason why most people lose money investing into individual stocks, because of the emotions,
No,
right?
you're absolutely right about that. And you mentioned Meta, right? That's a
Yeah.
perfect example. I remember when
Mhm.
the stock dropped below 100,
Yeah.
and a certain showman on CNBC was saying the stocks went down, went down, went
Mhm.
down, and same person, as I recall, was recommending it like 100 points higher,
Yeah.
right? So he's on CNBC now pounding the stock,
Yeah.
and sadly, some people probably did listen to him, and I do agree with you that again, I grew up, right? I've been doing this for over 30 years, so I'm an old
Wow.
man. Okay, I'm okay. And I remember
Well,
growing
let's
up.
rephrase it. You're long in the industry. You're not old.
Thank you so much. It's kind. And I remember with when Peter Lynch, the
Mhm.
the, the famed awesome fund manager for Fidelity Magellan, he said, "Buy what you know," right?
Mhm.
But I think it's really important what you said was true because yes, if you buy Coca-Cola,
Mhm.
American Express, Microsoft, you obviously don't know those companies, right?
Yeah.
There's a certain safety guard in there. But the
Mhm.
question really is that, you know, when looking at the financials, you're missing the valuation, right? You could have bought, for example, Microsoft. You could have bought Microsoft during the dot-com. Okay, if you bought in the dot-com in 1999, 2000, it would took you over 15 years to break even. 15 years is a very long
Oh my
time.
God, that's awful. Yeah. Imagine.
Okay.
Yeah.
So, but if you said, you know what, hey, I don't want to pay X number, multiple for the cash earnings, for the earnings, I think it's really expensive, then you realize that you should hold back. So you are correct about that, which is one thing that we do, I do,
Mhm.
is that, by having a comfortable review of the companies, valuations drive the bus for us. It absolutely drives the bus for us because, if you buy a company that's like crazy uh expensive, and you're just
Yeah.
being like attracted to the sexiness of the business, you're
Yeah.
attracted by all the media about it, right? Well, those stocks tend to go from 100 to 50. They don't stop at 70. I mean, so many stocks even today, right, to this past week, even it was a great week, a couple of tech stocks, they just one pass go and do not cut $200. You know, so I
Yeah.
think the valuation really is an important topic people have to talk about, which goes back to know your company.
Yeah, that's true. Like people buy stuff because they think it's, as you said, sexy, but it doesn't mean it's a good business. So people marry stocks instead of marrying spouses sometimes, and that's how I always tell, do not marry a stock. Like when the situation changes, well, observe what's happening with the stock. And it's a lot of work just to be an individual investor into individual stocks. It's a lot of work. You have to really pay attention to the earnings. You have to pay attention to the technical charts too. So I wonder, when we're talking about this, how do you manage risk? How do you do it in your fund? Like when you have a conviction and you say, okay, I'm gonna lose max 1%, or what's the strategy there?
So I think for us, um, risk management starts from the beginning. I think risk
Mhm.
management from the beginning is about not only what to be in, but what not to be in. Right?
Mhm.
If you avoid, like for example, digital currency.
Mhm.
I know a lot of people are way smarter than me, and they know the ins and outs of that. They trade it. I am just not one of those people, and I'm candid enough and honest enough to admit to that. So
Mhm.
we don't trade that sector. Okay,
Okay.
so and that's yeah. Some days, wow, digital currency made a lot of people a lot of money, and we're
Yeah.
happy for those people. But on the other side of the coin, when those days when it loses a lot of money, we're not there either.
Yeah.
So so risk management is about where not to be in to begin with. If you don't do it, you don't worry about it. Okay.
Yeah.
But using your example, let's say in companies we're in, if a company we're in, first of all, again, we use options to limit our downside. Okay, I recognize it limits our upside also, but I'm okay with that trade-off. I'm fine with that. The
So
second piece,
do you trade spreads a lot? Because when you say you limit your upside, when you usually buy calls, you have unlimited wins, but do you
no, well, for us is being, for example, being long in position, I also have a cover call on it.
Okay, I see. All right.
Which again will limit my upside depending on what the strike price it is. But I hedge it good.
Yeah.
But using your example, this has happened before. Let's say a company draws down on us. I mean, the first thing again is that I need to know why is it down. That's the first thing. Is it down because the market's down? That that's the first question to ask. And if it's not, I'm okay with it. The second piece is it down because it's a company specific issue. Well, if it is a company specific issue, then the question for me is going to be: is the problem permanent or is it short term? Is it a fixable problem? And if it's a problem, how severe is the problem? Okay, and that piece of it really is from experience, okay, from being this for a long time. Sometimes you just have to say you made a mistake. Sometimes you can also say the market's overreacting. And I think making a mistake, and I want to go back to that. I was reminded of that just very recently, that it's okay to make a mistake. It's not okay to stay in the mistake.
Yeah, to stay wrong. Yeah.
Okay. So for me, once I define those two, once I answer those questions, that's going to tell me what my next course of action is. Do I stay? Do I go? Okay. Do I add on? Do I eliminate the position completely? Do I sell? Do I sell half? Do I add on? All those questions really start from the answers to those questions come from where I started with. What is the actual problem and what's the actual cure for it?
Yeah, that's excellent. I really enjoyed this. Yeah, start the risk management from the beginning. I personally don't trade biotech because I can't somehow stomach the moves in biotech. I have the index in my long term, but I don't have any single stocks. So yeah, we all have something, right? And crypto, crypto is I don't know. I'm scared to touch it at this point. After everything what happened. So yeah, we all have something we don't like and something we kind of, as you said, like every sector has different behavior. It's almost like knowing their characteristics and kind of observing how to trade them and how they react. And that's how I look at that too. Of course, you can never 100% estimate how a sector or stock is going to react, but you have some sort of an information from the past that you can kind of see the probabilities for the future. So I think that's how I look at things too. And
yeah, you're right. Yep.
Yeah, so I personally trade mostly Tesla, AMD, Nvidia. Like I have like 10 stocks that I keep trading all the time. And then again, like when things are really beat up and sold off, like the XLP sector these times, I did really well with that in the last couple of weeks. So that was just like mine, like, okay, when are we gonna rotate to this situation? Yeah, that was pretty good trade actually. Yeah, so fun talking to you. I'm really enjoying this conversation. So I want to know more because every time I talk to you, I learn a lot. So I would love to.
You're being kind. Thank you. I'm always happy to help.
Oh, thank you so much. Yeah. I mean, it's been almost a year we spoke last time, and I have to say that I learned so much from our conversation, and my trading improved so much since last year. It's interesting with trading, like you go through this rite of passage and it's just like really frustrating and tough, and you make mistake, you win, you lose, and then at some point you just get it, and then it starts going smoothly, and then you get the risk management. And then I think that's why most people don't make it as traders, because it takes time. It takes time to learn.
It does take time, and sadly, I would say share this with you, but don't tell anybody. Okay, like what I know today is just the accumulation of losing millions and millions of dollars.
Yeah.
Learning the hard way, and and when those lessons again I learned, I could sadly recite to you right now companies top of my head that I lost money on and why I lost money on them. Okay. And that's important to say that because you have to remind yourself that, okay, this happened to you before, right? How did it feel? It didn't feel good. Don't do it again. Okay. And even right now, even today, I've managed Gondor for over 10 years. We only had one down year, okay,
Wow,
in our history.
amazing.
And one of the things that when I look at ideas, I am reminded myself of don't do it, and I know it's like, it's like the light, you want to go near the light, you're so attracted to it. But then I'm
Yeah.
reminded, wait a second here. I traded this company a while back ago, another in the same sector, and I just got beat up. No, I'm not going to go there. And so again, the memories of those painful losses, okay, are really so prevalent. It's part of your DNA. It has to be, and when it's part of your DNA, you recognize, you know what? You recognize that you don't, there's certain qualities of your personality that goes into it. For example, the one thing that I think is really awesome that I think you already noticed already is that you don't have to trade every single day. You don't have to,
No,
right?
exactly. Yeah.
Right? Sometimes you wait for that fat pitch. You wait for it. Okay. And if it doesn't show up, it doesn't show up, right? But you can't just invest it for the sake of the action, for the
Yeah.
sake of being in it. Okay. Then you can't simultaneously say, oh yeah, those are my highest conviction ideas. No, like for us, we always keep a very meaningful amount of cash on the sidelines. And the reason why we keep cash is that in case the market does draw down, if I'm fully invested, I have to now sell something at a cheap price to buy another stock at a cheap price. That's pretty stupid of me, I have to say. Okay. But I have cash. I could use cash to buy a company that's come down. I'm able to take advantage of it, and I'm able to not be a forced seller of the situation as well.
Yeah, I love that. It makes me very happy because I'm also sitting on cash. About 20% of my accounts, 20 to 30 always are in cash. It's the same reason. Like I made these horrible mistakes at the beginning. I would just go full in and then market started dropping and I was just sitting there like I can't buy anything. And a lot of times people even get margin calls. So what is your like
Yeah.
magic formula for the cash ratio? Like how many percentage of the accounts you keep in cash if it's not a secret?
So that really depends on multiple factors for me. I mean, first off, for example, after the coronavirus, we kept a very, very large percentage of our assets in cash because my biggest concern was that the vaccine did not work. There's a new variation of the coronavirus that happened. Then what would happen again? Will we get shut down again? The economy, right?
Yeah.
So those are things you look for. I think on the second side of the equation is that cash is really an if you will, directly correlated to the ideas I have and how confident I am of the ideas. If we have ideas that I absolutely love, I think they're great companies, I'm okay putting the cash to work. If the valuation is bottom basement value, then yes, I will put cash to work. But if it's just quote unquote good valuation, not a great valuation, I'm happy to wait. I'm happy to wait because like that time things happen. And when things happen, you want to be able to be there. You don't want to be invested when things happen. You're on the outside looking in. Okay.
Yeah.
But so that's really not where you want to be.
So when are you taking your profits? I'm just curious. Like, do you have any formula like, okay, when the scenario changes or when you're up certain amount of percentage or do you have any situation there that you could tell us? Like, what's your strategy?
So for me, it goes right from the beginning, and I apologize for being repetitive.
No
It really
worries.
goes right from the beginning on the research of the company. If the company is doing really, really well, and it's still operationally doing really well, I'm okay being the company. The only reason why I would flip it is if the valuation is so absurd that the company could be running perfectly and you still couldn't justify it, this valuation.
Like
Okay.
NVIDIA?
So I have exposure in NVIDIA, so can't talk about that one right now, okay? But but again, it's happened before, right? And I think that so that goes back to understanding your company, knowing your company, but also understanding yourself. Okay, and knowing, because if it draws down, how comfortable are you going to be with that company? Okay, like for example, people talk about Amazon, for example, or Microsoft, or even Apple, for that matter, right?
Yeah.
Meta, right? But all those stocks at some point experience a 10%, 20%, 30% drawdown. How did you feel? Did you feel good, or were you sick to your stomach? Whatever you felt. So for me, it really, again, we're driven by valuations. That drives our bus. The second drive our bus is going to be, what's the operational, of the companies. Okay, how are they making money? Are they making money? I'll give you an easy example. You mentioned biotechs, right? Like, so many companies are right now in the oncology space to get the next drug to beat cancer, right? Well, you could take a shot at a biotech stock as it goes through the trials. Some may work, some may not work. But the one drug that does work, that stock will go up probably 10 times overnight.
Yeah.
Okay. But if you're buying a company that has a cure for pancreatic cancer, for leukemia, or whatever ugly cancer it is, right? Even went up 10 times. Do you think the stock will go higher over the long term? I think it will.
Yeah, of
right?
course.
I
Yeah.
mean,
Yeah.
because it's got a cure for leukemia,
Yeah.
a cure for breast cancer, right?
Yeah.
I mean, what's the multiple on that? Big.
Yeah.
It's a big multiple, right?
Yeah.
Because and what's the moat on that? It's a big moat. No one else has a cure for that cancer, right? So you got a long runway, long way of profitability.
Yeah.
So that's really easy way to look at it for me to give you an easy way to explain it to you. But that's how I look at it for all my companies.
So you basically focus mostly on fundamentals, and that's how you establish the entries and exits, and that makes sense. Yeah. So you're like a value investor / trader, right?
Mario Gabelli is my mentor, and I would tell you another secret, but you gotta like just say to me right now, you won't tell anybody this, okay? Between you and me only, okay? I am just terrible at charts, okay? Like,
That's all right.
Japanese Bollinger Bands, Japanese candles, so on. Just not my cup of tea. Not there, So sticking to the financials, I feel warm and fuzzy about that.
That's so funny. It's interesting because a lot of people they worked in finance and they have funds. Like I get approached by so many, they want to actually study with me the technical analysis, because that's what I spent doing for 4 years. And I studied the CMT Association. I didn't do the courses, the test with them, because it's 3 semesters. So I just took the first one, which was more than enough when it comes to technical analysis. And I found it extremely valuable. It's like 750 pages of information, which was like, wow, that's a lot. But I love technical analysis, and I trade a lot based on that. Plus, I'm trying to trade the stocks that I own for longer term. I try to understand the fundamentals. And like, let's get back to Meta, for example. I think with all what Meta is doing and with their financials, they're still not overvalued. And if people don't understand the financials, they might say, oh my God, this stock is up so much since last year, let me sell, because they don't understand that the stock has a room to go. If they just look at the technicals, of course, it also depends on the time frame. I'm in Meta for long term, like I'm in Meta for next 10 years. I believe in that company. For example, that's my stock of choice. It's not a financial advice to anyone. I'm just using it as an example. So it's very important to understand at least a little bit of both. Look, it works for you without the technical analysis. I would feel like I'm drowning without it. I have to look at the charts all the time.
I hear you. I think you mentioned one thing just now. I think it's really important. People have to remind themselves.
Yeah.
When you own shares of a company, you're owner of a company today.
Yeah.
You only care about tomorrow. Whatever happened yesterday before you own it, it's none of your business.
Yeah.
You know, I mean, the stock could have made money, lost money. If you weren't a shareholder, why do you care? Okay, you own a company for its future prospects. So you're owning it based on today's information that you have and based on what you think it'll do tomorrow going forward. Okay, what metal was at 90, 150, 200 has nothing to do with you. Right? So something really important to remember that.
Yeah. Yeah. I love this approach. Like, I was talking on Spaces this week about hedging, and we had the discussion that, you don't have to necessarily hedge with puts every time you think the market will sell off, but you have the cash, and the cash is a great hedge as well, as you said, because when the market has a drawdown, you can just start buying to companies that you know their financials and you have a conviction in and you researched. And that gives you such a peace of mind. Even in my case now, as I said, like 2021, I wasn't ready for the market drawdown, so I had no cash left, and it was just a panic, and I was selling with losses. And then I learned my lessons from losing so much money in that year, that I always have some cash on the side. And I think it's an excellent hedge. Actually, it gives you like better sleep, I think, to have money on the side.
Does.
Right?
No, it does. Like you just said before, right? That type of lesson was expensive. It taught you, and that'll be with you. That's gonna be with you for a long, long time, and and it's a piece of you. But and I wish you didn't have to learn that lesson. I really, as your friend, I wish you didn't have to lose that money to learn, right? But the good news for you is that the lesson, the amount of money you lost, okay, the lesson you learn from that, you're gonna make a lot more money. Okay, you'll make more than you lost. And that's so important to always know that. I mean, so there you go.
Yeah, it's important. I feel like every single mistake I learned, I even wrote the ebook on that for people, because I want to, like, you want to help people to not lose money the same way I did. But I'm now profitable, and I'm up over 45% year to date. I'm really happy with, I do short swing trading, right? I don't stay in positions more than 3 to 5 business days. If the stock really has momentum, it's maybe longer. These last 2 weeks were a little bit challenging, I have to say, because we were in a chop. So I felt like my swings are like, one day I have to get out because the market was just changing direction. I don't like trading like that because it's not my personality, but I had to adapt a little bit, and I was profitable last week. And this week I was totally on the wrong side of the market. So this week was awful for me. But again, I lost money in a controlled way. I had my risk unit, and I said, okay, I think that the market goes lower because we broke through all the support, and I was getting short. And I said, if I'm wrong, this is the level I'm getting out. And I did. And that was my controlled risk. I was planning the max I can lose will be $4,000 this week. And I did achieve it, the goal. But look, it's fine. And next week I will make the money back, or the week after I make probably triple. So this is what I do now. But at the beginning was just a wild. And most people start trading without any sort of risk management, right? And that's
I mean, I would tell you, right, even as a professional, if you went back on, let's say, CNBC, for example, right, last Friday after the close, okay, everybody was talking like they were going to a funeral.
Yeah.
Everyone was like, the world's going to end, and so on and so on, right? Then and this week we had the best week the year to date.
Insane.
So it does change, but I feel like right now, the way the market is right now, I'm not totally bullish. I'll share that with you. I think the job numbers today they're good, but I truly do believe, though, that inflation is going to be here, stickier, longer. I think the Fed 2% is a dream at this point.
Fantasy.
Yeah, I think today you saw, like, the things I look at today, for example, was that wages were up 4.1% versus 4%. 4.1% is a big number still.
From last
And I
month
think
or last year over year?
the month to month, year over year,
Wow.
right now today, right? But I think when you forecast going forward, wages aren't going lower. You read the news, you talk about, everyone knows, for example, the UPS drivers making $175,000. Okay, you've got the UAW strikes for GM, Ford, and Stellantis. They all had at least a 25% bump in increase in salaries, just salaries. Not talking about the other expenses, your pension contributions, medical leave, and so on and so on, right? So all of these pay raises going forward, okay, they're all attached. There's some correlation on there, right? And you're seeing companies, when they announce the results, they talk about the profit margins decrease. Delta Airlines announced it. UPS, they announced it. And I tweeted that. I said, when they sell that contract, I said, you guys did a really bad job selling it to the shareholders. And the stock was down. Because when people saw the numbers, people are going to see, wait a second here. These expenses are out of control. So I just really believe the labor wages are going to go for even more. And it's funny enough, in the South, there's this chain of gasoline stations. One was named called Bucky's. Some of your subscribers may know who they are. And they're hiring people to be a manager at one of the gasoline stations. It's a $200,000 a year job.
What?
That's what I said.
That is
right?
insane.
So there's a lot of correlation to this going forward about what the wage is going to be. I think it'd be stickier, right? And I think the problem you're going to have is that people forget companies pass these expenses to consumers, either through shrinkage, right? We go to your shopping, you notice, wait a second here, this box of cereal, this thing is smaller and smaller, right? On the other side of the coin, you saw this week, Chipotle, they announced McDonald's, they're raising prices. They're raising prices everywhere.
They have to, because they need to pay the people, right? And that's
so for me, one of the things I look for is what's the actual demand. I know a lot of academics, a lot of government economists, they go, well, inflation is, excluding food, excluding rent. What? Okay, so there's no inflation. If you don't eat, great. There's no inflation. Just don't buy groceries. Don't go eat food. Don't go dine out. If you sleep on the sidewalk in Times Square, yes, there's no inflation because you're not paying rent. Congratulations, you're homeless.
I saw that
but there's
post.
No inflation for you.
And wait, I think they excluded the oil too, gas. I think it was another one.
So,
it was crazy.
And the reality is that a large majority of this country, see, people like in New York City or in cities where they take a lot of mass transit, subways, they don't understand. Like 90% of this country, people drive. People drive. They drive to work. So gas really is a big expense for them. And people get like the ultimate pay to consumers. They do pay for this. Like, I saw this week, for example, right? This week in Los Angeles, if you buy a meal from Kentucky Fried Chicken, okay, a meal that would cost you normally 16 pieces of chicken, that will cost you like $35, $40. In Los Angeles, it was $67. I mean,
it's crazy.
It's crazy, right? $8 for a Big Mac is going to be, right? A burrito is already like 14, 15. I mean, how much are you going to pay for a burrito from Chipotle? $25?
It's insane.
Right?
I know. It's awful. Like you can't go to dinner without paying $200 a person these days in a nice restaurant.
You can't. Well,
it's crazy.
So that's why for me, I really believe that I think interest rates is going to be stickier. Longer term, it'll be here. And I think that even though I think the driving bus for that is going to be wages. And I
Mhm.
think a lot of people, I think because Econ 101 tells us this,
Mhm.
that wages is a laggard, which has always been true, but we live in a world now where everything is so correlated, so connected.
Yeah.
It's not a lag, it's going forward. You know, and I'll repeat this again. Like, for example, once the UPS drivers settle for $175,000, those GM workers were saying, wait a second here, they make $175,000. I make $100,000 making a call. I deserve more money because my
Yeah.
skill set
Yeah.
is I deserve more money, right? Then you have those Kaiser permit in California. 70,000 healthcare workers went on strike.
Yeah. And
Can you
pilots
imagine?
too. Everyone.
Like, can you imagine a nurse or a doctor who went to medical school now saying that, wait a second here, I went to medical school, I'm saving lives, I'm a nurse, registered nurse, but somebody driving, and I don't say that I don't mean to say that in a disrespectful way, by the way, because
Yeah. Yeah.
a truck, a UPS truck is also a skill set, by the way. But they got to be saying to themselves that why is it that that someone driving a UPS truck is making $175,000? I'm a nurse. I'm making $100,000. I'm actually saving a life here.
Yes.
They're
And
delivering a
studied.
package here.
Yeah.
So
Yeah.
everything is so correlated nowadays that you just can't say, it's, it is so focused and narrow, right? Even Starbucks. You, People go work at Starbucks. Great, you're making 15 to $20 an hour, but your college education is paid for.
Yeah.
College is what? Yeah, the big way you go to college, 25, 30, 40, $50,000 a year.
Yeah.
That's a real expense to Starbucks, right? So, and that's part of that, the expense as well for labor.
Mm-hmm.
So I just really don't believe, I do disagree with when people say wages, labor cost is a laggard. I think it's going forward, it's here, it's also future for me. I also disagree when people say, well, it's of that higher incomes, of course, is a good thing, but I disagree that how much are you really making? If you make more money, yes, that's great for you. But if your buying power is actually shrinking because your cost of living is accelerating higher than your wage increase, you're actually losing money. Your
Yeah.
buying power is actually decreasing here,
Yeah.
right? So that's why I'm always I'm always in the camp of how much are you actually making? How much are you actually keeping,
Keeping.
right?
Yes.
Right?
Yes.
Well,
Yeah.
if you live in like New York, like and you know this,
Oh,
right?
I lived there for 7 years.
Okay,
People say
you
$100,000, you die on $100,000 a year. Like
you get
you
hundred thousand
can't live
dollars
there.
at the federal tax, state
No,
tax, city
city
tax.
tax.
Commuter
You're
tax. Yes,
screwed.
New York City is actually a commuter tax. Okay,
Awful, awful.
you're keeping less than $50,000 a year.
Yeah. And
Okay,
it's like, where do you want to live? In like a really bad, super scary neighborhood? Or do you want to live in Jersey and commute every day with boats and trains and who knows? It's fascinating how
yeah,
the
so
city is, I think, one of the most expensive in the world. It's absolutely insane.
that's like for me, inflation. Unlike the government,
Mm-hmm.
the government, economists, academia, everybody else, okay, who are
Yeah.
probably way smarter than me. I look at inflation more a boots to the ground.
Yes.
Like real life. What is inflation in real life? Not what you tell me it is. Like
No.
I said before, right? Like
Yeah.
if I never eat, I don't buy groceries, I don't eat out, there's no
Mm-hmm.
inflation. I'll be starved to death, but hey, I know inflation. Is that
Yeah.
really how life is? So I look at life really more in a pragmatic way, how it is. Which, by the way, I would share with you that we on our fund we start talking about inflation in spring 2021.
Yeah.
We were we I wrote quarterly newsletters since 2021 when people were still talking about transitory, when people thinking that inflation was dead when never came back. I was really concerned about that, and we placed our fund so ahead of the curve, which
Nice.
is part of the reason why in 2022 our funds were up last year. We made money last year,
Nice.
and it wasn't because what we did in 2022. It's because what we knew in 2021. We positioned ourselves into that, because the way I work is that I'd rather be, if you will, I'd rather be 6 months early than one day late. Okay,
Absolutely. Yes. Yes.
so so that again, so that right now, they said inflation this week. Inflation is dead. The battle is over. I'm just gonna sit in
That's
silence and
perfect.
say,
Yeah.
I just don't disagree with that, but we'll see what life brings us.
Yeah, I agree with you absolutely. Things are too expensive, and I don't think there is any side of relief, quite the opposite. So I think we're just being fooled here, but all we can do is to get prepared and trade and invest based on what we research, right? And what we believe
Yeah,
in. So yeah, awesome. This was so fun talking to you. I really, really appreciate your time. And I will
always a pleasure.
yeah, thank you very much. It was very nice. Thank you.
Thank you for having me
All right.
on, and good luck to all your subscribers, everybody. Good luck in trading, and
Yeah.
be careful out there.
Yes, thank you so much. And I wish you a really good end of the year. We still have 2 months, so let's see what the market brings.
Yes, take care, Leah. Thank you for
Yeah.
having me again.
Thank you
Bye.
so much. Bye.